afternoon. The time is 11 a.m. Australian Eastern Standard Time, and the day's date is the 11th of January 2013, and a very happy new year to all members joining me today on this audio. This is being the first audio of 2013. Well, we've had a fairly action-packed start to the year. We've had the fiscal cliff pretty much turning out to be a non-event, with Washington being able to cobble together an agreement at the 11th hour. And of course, once the agreement was finalised, equity markets took off to the upside, led by the US, and we saw investors begin to embrace risk once again. You could almost say it was a risk-on. It's been a risk-on trade since the beginning of the year. But anyway, stock markets have had a very strong start to the year, and we've also seen very good follow-through bullish action in Australia, Europe, and Asia. China and Japan, both of those markets have been very, very strong. And indeed, I noted today in my daily note that the MSCI World Equity Index hit a 8-month high. It's got to the highest level since May last year, prior to the correction beginning. So, all in all, a very positive start to the year. And I remember the old saying comes to mind, the old Wall Street adage, that so goes in January, so goes for the rest of the year. So typically, if we get this underlying strength in the first month, it will typically be a stronger year. I think that this year is going to be a good year for equity investors. I don't think that it's going to be a year where we don't get a correction. I think there is going to be a correction this year. But I think generally speaking, it's going to be a very, very positive year. And I'm looking for quite strong gains, particularly in the Asian region and Australia, given that those stock markets have lagged behind those markets in North America, particularly the US, and certainly some of the European markets such as Germany. So I think this is going to be a year where those stock markets play catch up in what has been quite a dreadful period of underperformance, but particularly for Japan, China, and Australia over the last 4 or 5 years since the advent of the GFC. And in fact, if we back out 2009, which I would really attribute to being a rebound year in what was a debilitating bear market, during the GFC, when markets such as Japan, China, and Australia lost more than 70% of their, or 60% of their value. So I think that this year is going to be a good year, and I think what's going to drive that is obviously we're not seeing any evidence. And remember, running into the third and fourth quarter of last year, many economists and investment banks came out with all sorts of negative publicity and forecasts that the Chinese economy was going to collapse and was going to derail, and we had prominent global doomsters, economists such as Nouriel Roubini issuing his warnings, when markets were at made their acute lows in June. Well, no, of course, none of that has come to pass, and we've seen China continue to release quite strong economic data, showing that the expansion is now back on in terms of the growth rate is now beginning to accelerate. And yesterday we saw stronger export and import numbers, and I think the very encouraging sign really is the fact that commodity prices are reaffirming that stronger economic data that's coming out of China. So we're seeing iron ore prices move, back above 150, and copper move back up towards $4 a pound. It certainly has been encouraging, and even the oil price, which I'm quite bearish on, back above $90 a barrel, back towards sort of 93. So the commodity space is confirming what we're seeing in China. Also, I believe the markets are beginning to price in what is likely to happen, what is likely to unfold in Japan. The Japanese stock market, since Shinzo Abe was elected, has been on fire. We've seen a very, very strong move to the upside in the Nikkei. It touched or got close to 11,000. I think it topped out at 10,700. And, I'm on the record for predicting 12,000 this year. Well, I think that target could well prove conservative in the event that the Japanese authorities are successful in bringing down the value of the yen. So far, so good. The yen has lost a lot of ground against the US dollar and other currencies, and that's principally been on the back of quite strong jawboning and rhetoric from the new Japanese parliament. But for this time, I think it's real. We've had a number of false dawns in Japan. This time, I do believe they will be successful in bringing down the value of the yen and deploying quantitative easing policies such that has been deployed in other countries such as Europe and the United States. And Abe has reinforced, the lifting of his inflation target to 2%. And it's very easy to print money, really, at the end of the day, once there is a political commitment to doing so. And, I think that we have that commitment now for the first time probably since Koizumi was the Prime Minister of Japan about 7 years ago. So I think that Abe is going to go down that path with a fair amount of conviction. I think the fascinating market to watch this year, and obviously we watch a lot of markets and we're involved in a lot of different markets and securities, but I think the fascinating one really is Japan, simply because it's been in a 22-year bear market. And obviously, I've gone on the record this year as stating that bear market is now over. And I think that has been confirmed by the significant upward dynamic we've seen in that stock market since December last year. So, we're holding a number of Japanese stocks and in my trading account, and I think that rally is going to continue to run. I think there'll be a lot of early bulls who get out early, but I believe that this will be the start of a new move to the upside, simply because the market is extremely cheap, in fact one of the cheapest, and the profitability of many of those household corporations has really been crunched by the artificially high value of the yen. And of course, the reason the yen's been high is because every other country, in terms of the major economies, have been devaluing their currencies. So I think that's going to be a second boon really to global stock markets this year, and certainly if we can get some growth out of the Japanese economy, that will prove very positive, I believe, for the commodity complex. Particularly if we can get the Japanese public to begin spending, because they are, after all, the world's second largest economy behind China and the United States. The S&P 500 made a 5-year high, the highest level since 2007, and it's taken out the previous high, so that's encouraging. But I think that there will be some resistance around the all-time record highs for the S&P and the Dow. My view is that there's not really the conviction yet, and we haven't yet seen the strength in the US economy for those stock markets to move to record highs. But who knows? The Federal Reserve, they continue to buy US debt back and monetize their debt and print money and inject liquidity into the system. Who knows where that Japanese market could go? So I think we could well see some further upside there, but I think that there will be some resistance. The gold price has been fascinating to watch this week, and I think what's really interesting about gold is a lot of the bulls have become so despondent and so negative they've bailed out. I think we saw the final flush out a week or so ago when the price, or earlier this week when the price got down to 16.25. It really looked like signs of capitulation, with a lot of the trading community bailing out of that overly long non-commercial position, which of course built up when gold prices ran to $1,800. $1,800 is the critical resistance level, and we've got to see a meaningful punch through that level for the bull market really to be reasserting itself. But I believe it's completely intact. It's back on key support levels, and we will shortly see the price begin to move again to the upside and another attack on that 1800 level. Interestingly, with gold stocks, the market really has deserted that area of the market as just being simply too hard. There's a bit of negative publicity, and sentiment is quite poor. But I think this is really signs of a near-term bottom. And my scenario, as I've been writing up in my daily note, is for the bull market to reassert itself. So, on that note, welcome all back from your holidays, and I look forward to joining you same time next Friday. Bye for now.